All right, welcome back, everybody. Night number four, and our concluding night this week of the Technical Analysis Virtual Workshop. Scott Durfee here. Want to be the first to welcome you out. I have with me this evening, as always, Mr. Ray Kimbrell. Hello, Ray Kimbrell. There you are. It's good to see you again tonight. You're wearing Texas orange, I see, which is
Yep.
appropriate, being that you're from Texas. I'm going to introduce you here in just a little bit, but wanted to make sure everybody knows that you'll be with me again here tonight. In addition to Ray, again this evening we have Brett Crowther. Brett, one of our illustrious coaches and coaching managers, actually. He's been doing this for at least as long as Ray and I have, about that same time. He'll be in the chat tonight, answering your questions, providing valuable resources. There may be a link or two that comes through there. We'll try and point those out. That can be very helpful to you in your learning process and everything else that we're doing here. So keep your eye on that as well. Also, though, I may remind you, there are literally going to be thousands of you tonight. There are hundreds now. There will be thousands eventually, as there has been every night. There's one guy in there in that chat box. That's Brett. Now, Brett's pretty amazing. He's got superpowers for sure, but I don't know that anybody could definitely keep up with the amount of potential chat box questions. So keep those things in mind. I mentioned that normally we do a Q&A on Friday night for these. This one's different because tomorrow we have a great opportunity with National Investing Day. National Investing Day is just a phenomenal opportunity for you all and all of Schwab's clients to engage in education, various activities and workshops and walkthroughs and things like that. So please make sure that you take advantage of that in lieu of the Q&A tomorrow. A couple of things I want to make sure that you're aware of it by way of kind of housekeeping items. Many of you are already using the reference guide. I'm going to tell you that the reference guide is indeed the slides that we have and that we are using here, but it's actually more than just the slides that we're using here. I was going through some of the things that we'll be talking about tonight, looking on the reference guide, and that's a very valuable resource. So make sure that you download that. We'll show you how to do that in just a minute. I'll remember to do that when I take you to where we need to go in just a couple of minutes on a couple of things that we're going to be talking about as well. In addition, I want to make sure that you understand that the webcasts that we'll be talking about, one of the most valuable resources available anywhere, not just here at Schwab, but anywhere. One of the most valuable resources available when it comes to learning, trading, when it comes to learning the intricacies potentially, sometimes the little nuances around that. Some of you have some of your favorites that you love to follow, etc. And there's very good reason for that. So make sure that you're participating and taking advantage of those webcasts. We'll be pointing those out again as we go. They're all contained right here in the YouTube channel, the very channel that you're sitting in right now. So this actually might be a good time to go ahead and hit subscribe. Also might be a good time to go ahead and hit like. We appreciate those things. They help us quite a bit as well. For those of you who haven't been able to join us over the last couple of nights, this is, again, as I said, night number four. Each one of these nights, especially, well, this is actually true in all of our workshops, but each one of these nights really does build one upon the other. So I wanted to just show you where and how to get the recordings for tonight's and last night's and Tuesday nights and Monday nights workshops. So let's do that. I'm going to go right over here. I'm going to come back to that slide deck in just a minute when we get started. But I want to take care of a couple of these things first. I'm going to come right over here. We're on the internet. I've gone to schwab.com/coaching. And we're just going to actually leave it there at /coaching. So if you'll write that down or put that in your web browser right now, that's going to take you to this page. Once you've come to this page, I want you to follow my finger across the top here. I'm going to stop right there where it says live webcasts and virtual workshops, and I'm going to click there. I'm going to come down here. I'm going to uncheck webcast. Now, I will point out that this is where you'll find the schedule to the webcasts, upcoming webcasts, etc. A very valuable, great. Again, I just mentioned this, very great tool, something that you should be aware of and be taking advantage of. I'm going to, though, uncheck webcast because I want to, just as a reminder, I'm taking you to where you can watch the recorded videos from the last several nights. I'm going to come right here to last night's event. That was the 29th. I'm going to click right here. Now, while I'm here, I'm going to segue for just 1 second. I mentioned that you should have the reference guide downloaded. While you're on this page, go ahead and do that right now. Come right here to where it says Technical Analysis Reference Guide and click on Technical Analysis Reference Guide. And it'll take you to the reference guide. You'll notice, and this is all 4 nights. This isn't just for night number 4, but this is for every night that we've taught this course. And so as they have one night built on the other, you can see that these are the slides that we were using through the instruction. And I will again mention that they are even more than that. There's many more slides there than what you will find just in our slide decks. Okay, so now that we're here, and I'm just to remind you, we're going to see where we can see the replay of the previous night's events. Once I'm on here, I'm going to, again, like I said, I'm going to come to live webcast virtual workshops. I'm going to click on this one. This is the one that this was last night. So I'm going to click on Learn More. Once I've clicked on Learn More, one more step, okay? Resources. Just come right up here to Resources, click on the Resource tab, and you have night number 1 right here, night number 2 right here, night number 3 right here. This will be night number 4 or tonight's once it gets recorded and uploaded at some point tomorrow. So that's how you do all of that. Really important, again, a great valuable tool and resource. I wanted to point that out as one of the first things that we're talking about here today. Everything we're going to be doing today will be for educational purposes only, by the way. We're not going to be giving education. We're going to be doing that all night long. We're not going to be giving advice in any way. So please bear that in mind. Keep that in mind as we go through these things. Before we get going any further, I wanted to introduce my good friend, Mr. Ray Kimbrell. Ray will be coming in halfway through the evening tonight and teaching us and helping us understand some pretty important and valuable lessons. But Ray's been doing this, as you can see, since 2004. He's a regular contributor on the Schwab network. He specializes in teaching the Thinkorswim platform, technical analysis, option strategies, and a bunch of other stuff. Just a great guy, all around phenomenal teacher. Ray, one of the things that I've been noticing as I've been reading every comment in the from the surveys is everybody loves the way Ray teaches things slow and methodical, and Ray does an awesome job at that. So great job, Ray.
Thank you.
Ladies and gentlemen, I introduce Ray Kimbrough.
Thank you very much. It's hard for me to go slow and methodical because I talk really fast.
Yeah.
So I gotta focus in on it. But it's great to be here. Looking forward to helping out Scott here as we get going. And I'm glad to be with you all. And I hope you enjoy the night. And with that, I want to say let's introduce the man of the hour. He's going to start us off, the Scott Durfee. You can see he's been doing this also for a minute or two since 2006. He, as well, is a regular contributor to the Schwab Network, which is brought to us by our Charles Schwab Media Production Company. And so he's been doing this, like I said, teaching the platform, Thinkorswim, technical analysis, stocks, options, you name it, he's there. And we're happy for him to kick it off tonight. So with that, my friend, rock and roll.
All right, fantastic. Thanks so much, Ray. Gang, I'm going to ask you this question. I've asked you this question almost, I think, every night. If I didn't, it's because I made a mistake, because I have certainly intended to. But I want to ask you anecdotally, and I want you to answer in the chat box, if you will, please. Give me on a scale of 1 to 5, 5 being I know everything there is to know about it. 1 is I know hardly anything about it. 1 to 5, go ahead and rate yourself on your knowledge and your comfort level around using the Thinkorswim platform. Just go ahead and drop that in the chat box for me. And there's a reason that I'm asking this, apparently and obviously, and that reason is this. We have some phenomenal, great resources for you, as you can tell. I mean, people are blown away. Many of you tell us all the time at the virtual, I mean, at the live workshops. I can't believe that you guys put this kind of time and investment into us. Well, we do, and we do it because Ben always says it, because we like you, and that's true. But there's a benefit to us. There's a benefit to you. We grow, you grow, and when that kind of thing happens, it just creates a synergy that raises the vibration of the whole deal. I'm seeing anything from 1 to a 5. It looks like if I had to, let me just calculate quickly. Our median score is exactly 2.1 on that scale, Ray. 2.1.
That's some serious
Oh, wait, it just
calculating.
got skewed. There were a few that just came through. It's now 2.6. So there was a few that came through. Gang, I say all of that in jest. One of the things I do want to point out to you tonight is if you'll look right here, I have that QR code. I have the bit.ly link for you, those of you who would rather copy and paste it or type that in. Please take advantage of the one-on-ones walkthroughs, and it's not a walkthrough, the platform demo and platform setup experience that you'll be able to do with one of our Thinkorswim representatives. You can do that by scanning that QR or by using that bit.ly. Now, I will say this. There have been a lot who have done this, and I know none of you would, but there have been a lot do this because, I know, and I get it. My ambitions are great, my intentions are great, etc. And I'll schedule something, and then something will come up, or I'll forget about it, or what have you. When you're scheduling this, you're scheduling it with one of our professionals, and they're blocking that piece of time out, and that piece of time is no longer now available for somebody else who maybe wanted to use it. So do me a favor. If you're going to schedule an appointment, keep it or cancel it. So, but I encourage you, please get signed up, take advantage of that. You'll be so glad, so grateful that you did. Tonight, we're going to talk about entries and exits. I know we talked about entries and exits last night to a degree where, more specifically, last night we were talking about bounces and breaks. And tonight we're going to continue our discussion around bounces and breaks, and we're going to be pulling in a lot of discussion around um, exits and entries. So let's just take a look real quick at our goals for this section. We're going to talk about, like I said, entries and exits. We're going to identify setups, triggers, and targets. We already did a lot of that last night. Ray really helped us a lot with the targets. We're going to understand entry and exit considerations. Again, and Ray mentioned this night number one. I think we have every night. This might be one of the more important things that we talk about in every workshop, and that's risk management. We'll be doing that tonight. Ray will be using conditional orders. These are orders that I kind of alluded to last night, where you put a target and a stop in at the same time, and one will cancel the other as they get filled. So this is going to be a great fun class tonight as we begin to put all the things that we've talked about into kind of practice. Okay, so we talked about this particular slide. I'm going to review this. These next 3 slides are kind of a review from last night, but some moments to enter are better than others. And in technical analysis, it says these are bounces and breaks. I would contend that these can be bounces and breaks. There may be other types of things that people like to look at or make decisions around, but I would probably even be able to make successful argument that even those things are bounces or breaks. And so, these again are so foundational and so fundamental to the things that we'll be doing and the things that you'll be doing and continuing to do that we're going to spend some time on it again tonight. So just as a reiteration, just as kind of a review, we know that a breakout occurs when the price penetrates a level of support or resistance. Okay. Now it says penetrates. We could maybe take it a bit further and say closes, not just penetrates it, but penetrates it and closes above it or below it, etc. We know we can have a bullish entry or bearish exit when we do this. Resistance breaks, again, both breaks and opportunities. Bounces, we talked about cohold, we talked about kablode. I have a treat for you tonight. Let's get into that. So let's just go straight to the Thinkorswim platform. We're going to get busy with some fun analysis tonight, and I am excited to get into that fun analysis tonight. I froze, guys.
I'm already there. Hang on.
Okay, Ray. Okay, Ray, going to take it with you, Ray. Let's go ahead and, if you don't mind, let's take a look at our first one that we're going to look at tonight. And I'm just going to kind of walk through these pretty slowly, which is
Right?
going to be good. But let's go ahead and look at XOM, shall we?
Yeah.
XOM. And if you'll pull up XOM there, let's go ahead and draw in some levels of support and resistance, if you don't mind.
All right.
Um, we can just kind of start putting those in wherever you think that they belong. Yep, that's a good one there. That's a very important one there. And then, of course, anytime we've got something along the top right there, Ray, what I would like you to do, if you don't mind, is zoom in right at that middle of that apex and zoom to the right. Yep, somewhere in there, and then just zoom right. Now that we did look at this last night, gang, so you'll notice that as the stock came down from that level of resistance, that high level of resistance, and came all the way down through what would become eventually another level of resistance, and then hit that bottom. Right there at that bottom, we see a bounce. Now, at that bounce, could that have been an entry opportunity? The answer is obviously yes, that could have been an entry opportunity for a couple of reasons. One is we just have a bounce. The other one is that's actually that bounce is actually a close above the high of that low day. Now, a great opportunity, potentially a trader could, and again, when we see those bounces, we anticipate that it will continue. So when we see that bounce, we could potentially anticipate a continuation of that and enter that trade there. Now, if we didn't and it continued to go up, we see that ExxonMobil is currently bouncing off of a level of resistance. You know what's interesting about that? Chevron's doing the same thing. Devon Energy's doing the same thing. Most of your some of your oil companies are all doing that same thing. What happens now that we have this bouncing of the head along this level of resistance? We look for a break of resistance. If we get a break of resistance, and maybe with confirmation, then maybe we could take a bullish trade. But as for now, the trade opportunity could have potentially been that close above the high of that low day, and that potentially may have even ended up, Ray, at that target where we're currently at, right?
Yeah.
Okay,
No, yeah,
go
good
ahead.
analogy. I think you're on the money with, especially where it's sending up right now.
Yeah.
Actually, kind of formed a bearish Harami.
Oh, you know what? It sure has. Yep, it sure has. So the bearish Harami, this is the day today, Ray, if you'll point that out, is an inside day to yesterday's price activity. So that is a bearish Harami. When we say a bearish Harami at a level of resistance, what would we expect? We're going to anticipate a pullback because that's what we would expect it to do. Unless what? Unless it does something different, and then obviously we would approach it in a different way,
Matter
right?
of fact, we'll be showing some of those.
Yeah,
Oh, it did something different things later on.
yeah, you're right. Ray, pull up BMY for me. BMY. Yeah, yeah. So again, let's go ahead and put in those levels of support and resistance for me, if you don't mind. Yeah, right there. Perfect, perfect, perfect. Now, Ray, I want you to ignore today. Okay, so don't put that one. Yeah, don't do that. But do me a little favor. If you'll just start, there you have it.
Well,
Perfect. Okay, so if you'll start drawing a line at the top of that green candle, that momentum candle, right at about $60. No, one more over to the right, one more.
wait here.
Yep, yep. At the top of that, draw me a level of resistance going down, please. So as you can see right here with Bristol Myers Squibb, we've got a level of resistance right within this channel. So you can see that we've been having a bounce within the channel between 57 and 62, and then we start seeing a pattern of pressure moving to the downside. Now, when we see that, we are going to be interested because what's basically happening is we have a small squeeze, what we call a small squeeze, happening within this channel. And so, Ray, if you'll give me one next day, and the one next day gives me a big candle. Now, that's a big candle. And I think that's actually today. That candle is a candle that jumped on an earnings call. Somebody in the surveys asked yesterday, "Hey Scott, can you point out, or guys, can you point out what those little dots mean, or those little icons mean at the bottom of the charts?" And that's what that is. So the blue one that you see there, that's an earnings announcement. The red just indicates that there will be a call. There's a green one down below and to the right of where Ray's cursor is currently, and that's actually a dividend showing 63 cents being paid on that particular day, ex-dividend date. So that's what those things are. Okay, so we saw that big day jump on that earnings call. Ray, what was that today?
That was today.
Yeah, that was today. So would that potentially be an entry signal? The answer is potentially it could be. Is that definitely a cohold? Yeah, there's very little question in my mind that that's a cohold. Coholds are coholds are fun because coholds can really kind of make it. I don't want to oversell coholds because nothing, again, Ray, is the crystal ball. But if
No,
I can start seeing coholds, then I can start seeing flags and I can start seeing wedges and I can start seeing a few other things. So, um, Ray, do you have that Cahold thing set up in your
I do.
yeah,
I
would
can
you
set it
mind
up easily.
opening your left sidebar for me? Okay, this was the treat that oh, you do already have it set up in there. This is the treat that I was going to mention to you. A lot of you are thinking, if I could just have maybe some help in visualizing or maybe catching some of these things that we're talking about. That Cahold that Scott and Ray talked about yesterday, if I could just have some help visualizing how to see that. You'll notice that in Ray's watch list right there on the left, he has a column that's called Cahold. And what that green block is representing in there is that there's been a cohold. And it doesn't necessarily have to be the next day or today. I think that one's within 3 days or what have you. So, how many of you would like to have that? How many of you would like to be able to have the ability to put that column in your watch list? If you want that, we can take a minute or two right now and show you how to do that, provide that for you. If that's not worth it to you, then we'll keep moving on. Okay, all right.
I got a few. We'll get a few
Yeah,
yeses.
it looks like they want it. So let's do this. Brett has already gone ahead and dropped in a code. That code is 3 capital K, YKH, 6 capital C. You can see it right there in the chat. I want you to go ahead and just copy and paste that. Just right now, just copy it. You're not going to paste it anywhere yet. Just copy that. Once you have that copied, once you have that copied, guys, this will be in the recording. So if you're not able to take notes and keep up as we go through it, then it should be in the recording. But once you have that copied, I want you to go up to where Ray is currently pointing, right? That very top gear. Go ahead and click on that for me, Ray. Once he's clicked on that, he's going to come down to where it says open shared item. Okay. Open shared item. This is an item that I have shared with you. You're going to open it, kind of a way to remember it. So I'm just going to have you now paste it right there in that shared item URL.
Now, the key also, if I could emphasize to everybody, Scott, we're doing this.
Yep.
It is case sensitive, folks. So if you just wrote it down,
Yeah. Do
it
make
is
sure.
case sensitive.
Do make sure. Okay. From here, we're going to hit preview. Now, once we hit preview, you'll notice down at the bottom, it says import item as think script quote. That's okay, but we're just going to change that to Cahold. Just go ahead and block all that out and type in the word Cahold and now hit import. And
And I'm not going to do it because I have it already
Ray's
imported.
got it, probably already got 7 or 8 of these inside of his. So you will hit import. Now go ahead and do that. Ray, you go ahead and hit cancel. And now, so where do you find that? Anywhere that you can locate a watch list, you're able to modify the columns and add this column to those. So, going to have you just go right up here, Ray, to the top columns. There you, oh, perfect. Look at that. He's pointing it right out. So go to the top columns, that column there. Click on that little gear. Once you've clicked on that small gear there, I'm going to have you, yeah, click on that small gear. Go ahead and hit customize. Go ahead and hit customize. Once you've hit customize, I'm going to have you go ahead and have lookup item. We're going to look up the item that we just created. CAHOLD. Yep. Yep. Go ahead and hit that. Go ahead and click on that to add it. You can see Ray already has it added to the right there. All you have to do is highlight, click add. You'll see that it's already to the right at the bottom of his list. And so it's already on there. Now you can go ahead. I would have you just save that. Ray's just going to hit cancel, etc. So now, gang, when you're coming in here and you're doing your support and resistance and you're doing your scanning and you're doing your technical analysis type of stuff, you can come in here, you pull up your watch list. This is a virtual workshops examples watch list that Ray has. You can see that you have your cohold column there. Ray, if you click on the top of that cohold column, it will sort all that. And you can now, there you go. Now you can just sort through the ones that have the cohold on it. So Ray, just go ahead and pick any of that. No, 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 no. Ray, pick AMAT, AMAT, right there. No, up, 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 up. One more.
Oh, just type it in.
Uh, okay, AMAT. And so, cohold. Let's talk about this particular cohold. This is one that I wanted to talk about. Ray, I want you to draw a support line right where you're at. Just right there. Yep. Perfect. Love that. Okay. We really don't. Now, if you want, can you zoom out just a little bit for me on this? We really don't need to, but I want to kind of zoom out, not
Zoom out.
yeah, please. Just a little bit. One more. Yep, there you go. Okay, so you can look left to confirm right this level of current support has definitely been that level of resistance in the past. And so you can see that today's current or the last few days current price action has been bouncing off of the what has been a recent high, and I think is the high for applied materials, that has come down to an obvious level of support and has now we have a cohold. And we identify that in some ways by what we just saw there on that thing that we were able to create through the think script. I was having a hard time with that word, but with the think script. Now, I do need to tell you this, that think script that we just gave you does not guarantee anything. Okay. Any shared item does not guarantee time or accuracy or performance. These are just ways to kind of maybe direct our eyes, and then we make the decisions around whether it's efficacious or not for us. But Ray, there it is. There's applied materials. We do have a bounce. We've got some different patterns that have been happening there, but I think that that would have been an opportunity today to potentially enter into that trade. What say you?
Yeah, I mean that's one of the great things about the cohold. One of the things, folks, to remember on this is that you don't have to have like a flag. It doesn't have to be uh, breaking out of an ascending triangle. It doesn't have to be a pennant. It doesn't have to be any of the price patterns we talked about. Is that a plus? Yeah, it is a plus if it has those formations coming in. But depending on what you're doing, what if you're already in an uptrend and you're just following up along a horizontal or a diagonal support line, all right, or support area, and it's bouncing off a diagonal support to the uptrend, and you got to hold. Could that mean a possible entry? Yeah. All right. So that's the nice thing about the cohold script is all it's doing, and it's very important to listen to what Scott says about it. It's not a guarantee as any time, accuracy, or performance because you can have a cohold like we have right now, and the very next day, whoop, nope, that ain't gonna happen, right?
Yeah.
So make sure you understand that, and don't look just because it's a cold. Don't think you can load the boat. Here we go, back up the truck. That's
Yeah.
not what we're saying at all, and it's not what it means either.
No,
Okay.
that's exactly right, Ray. That's exactly right. So, yeah. Um, the cohold is today. The question is, can you show me the cohold? And the cohold is actually today. So we're bouncing off of that level of support over the last 2 days. 3 days ago, which would have been Monday, we came crashing. It did not crashing down, but it came down a little bit. Found that level of support, which had been a previous level of resistance. Again, looking all the way to the left. Even you could even gone lefter than that, Ray,
Yeah.
on that level of resistance, but you see that bounce and that close above the high of the low day. Ray, do me a favor, type in, let's look at MDLZ. MDLZ. You were talking about pennants and flags and those kinds of things. Can you zoom out to a 1 year for me? Let's zoom out to a 1 year. Now, gang, just kind of a observation. Sometimes, just sometimes, um, when we're looking for or trying to make some observations, sometimes it's good for me to step back, to just step back so I can identify the separate trees instead of just see the forest. So when I just step back like this, maybe I can start seeing things that I may have not seen otherwise. Ray, before you draw those, actually, in fact, you can leave those, but do me a favor. You see that top, that peak? Yep, there. Draw me a diagonal resistance down to that level of support that you just drew where that little spinning top is. Actually, that won't work. That won't work. Nope. So hit the next one. Yep, the high, the high, the high. There you go. Then the next high over to the right, over to the right. Yeah, I'm gonna have you. Okay, that's fine. Just come in. Yeah, come in right there. So what I'm trying to show, gang, uh, is, and then Ray, if you'll go right to where you are now with that bottom red candle and draw up, what I'm trying to show here is a larger
Oh,
wedge, there you go, a larger wedge. When you see a larger wedge happening like this, now you can zoom in, Ray. It may help to be further out in order to see it. Now we have a wedge. Ray, what is a wedge? What am I looking for here? What kind of candlesticks are you seeing around what areas? How would you adjust those levels of support and resistance around the different ways that you could and stuff like that?
yeah. So right here, this top level of resistance is coming through. All
Yeah,
right, and you see this hammer that's formed up right on top of that, right? So
yeah.
it's pretty much a little bit of more of a bullish type signal, and then you get the confirmation. Matter of fact, that this close above the high of this low day. It is. All right. Matter of fact, the close of that one is 57.58. The high of that one is 57.53. So five cents higher. So by definition, that's a cohold of that. Okay. Then you get another big candle, which is what, folks? Is that momentum? Momentum candle here. Okay. Now, this hanging man, is that coming in right there at a level of intermediate resistance? It is. And it actually pulled back, but right back down to this support area, back up, test it again, test it again. So, what do you have here? You have a downtrend, short-term downtrend into a double top. Is that a reversal pattern? It is. And what happened here on earnings? Had a good earnings statement, broke through, and then you are at the next level.
You got it. I love that. And so, as you can see, gang, that's what we call a pennant. Ray's going to show us some flags when we start setting up some of the things that he's going to be doing as well. But I chose tonight not to focus a ton on these types of things because I don't want us to get too caught up on just looking for patterns or just looking for the way things are supposed to look. I'm looking for areas of support and resistance. I'm looking for bounces, breaks, holds, and kablodes. And other things, but for for what we're talking about tonight, those are the kinds of things that we're looking at and for. Let's do another one, Ray. Did we already look at Apple?
We did not,
And
but
I know
we
you're going
can.
to look at Apple as well, but I want to, and maybe we can. Okay, let's talk about Apple. We have some cool stuff happening here, Ray.
Like
So yeah, yeah. Okay, so what do we have here? What do we have here? What do we have here? What we have here is it looks like
baseball team pennant.
a pennant. Yeah, New York Yankees, right, Ray?
No, 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 no.
So we see the pennant beginning to form here. Ray's gonna. I think you're gonna do a trade around this one in a few minutes, Ray. But am I right?
There may be something going on there,
I thought
potentially.
so. Yeah, I thought so. But I wanted to point out a couple of things here. You'll notice that Ray's got this pennant going on, but and that's kind of the first thing that may catch someone's eye. But that top point of the head, that pointy head on that pennant right there, it looks to me like that's been a level of resistance. And so that's going to be something that we're going to want to be cognizant of, paying attention to. Ray, zoom in on that last several days of activity. Yeah, that's fine. And so, what is today's candle? Today's candle is a what we call an indecision candle. Look at those long failed moves, one to the upside, one to the downside. There seems to be some equilibrium happening there. So this could signal that Apple is ready to move in one direction or the other. It's coming to a squeeze for sure. And so we'll just kind of keep an eye on it. I'm anxious to see Ray's treatment of that as we move into it.
Yeah. Matter of fact, they reported earnings today just after the market closed, and it looks like
Yeah.
not much movement. We're still after market pricing 268, closed at 271. So we're not much going on right now.
Yeah. Yeah. Okay. I think that that kind of helps us, Ray. Ray, if you'll, I think I can share my,
Is it coming back?
yeah, I'm coming back to my PowerPoint. So I'm going to transition. I'm going to let Ray be taking it over here in just a second. But before we do that, gang, this is an opportunity, good opportunity for us to just kind of remember or talk about, some again of the resources. On May 16th in Chicago, we'll be doing a market drive at the Renaissance Schaumburg Convention Center. Again, a great opportunity. This is a one-day opportunity. This is a high-level market approach. We'll be talking about options. We'll be talking about macroeconomic type of indicators and the types of things that are happening within the markets, et cetera. So that's happening there at the Market Drive in Chicago, Illinois. The next one like this that we have, but that's going to be in person, is a technical analysis on Friday and an option strategies on Saturday. That'll be happening in San Diego on June 5th and 6th. June 5th and 6th at my very favorite hotel in the entire San Diego area. So a great opportunity, a great place as well. And then again on July 17th and 18th in Chicago. Okay. One other thing I wanted to show you, I mentioned, I'm going to come back here to the web page. When I come back here to the web page, gang, I mentioned that we have an opportunity for you now. I'm going to go to schwab.com coaching. We have an opportunity for you now to go ahead and sign up for the Option Strategies virtual workshop that's coming up in June. I'm going to come right here to schwab.com/coaching. I'm going to go ahead and click on the live webcasts and virtual workshops. Now, again, I'm just going to do this because it makes it cleaner for me to look at it, but here's all your webcasts, okay? So let me go ahead and unclick the webcast. I'm going to go ahead and skip over to um, June. There we go. So beginning June 8th, this is your Options Strategies virtual workshop brought to you by none other than yours truly, Ben Watson, Ray Kimbrell, and Scott Durfee, three pretty okay guys. There's your reference guide for it. I would highly recommend taking advantage of downloading that in advance and maybe doing some preparation, just some brief preparation for it for those of you who have not attended yet. And I would definitely recommend that everybody come and join us there as well. Even if you're not fully aware of or don't understand options, and do know that options aren't suitable for all people, for all traders. They do have unique risks attributed to them. We talk about all those things and try to help educate you around those types of things as well. So make sure you sign up for that if you haven't done so already. Looking forward to the remainder of the conversation with Ray. And so with that, Ray, I'm going to go ahead and kick it over to you, my man.
Sounds like a plan. So thanks, Scott. Great job. Don't go too far. We're going to do a lot of things here together here in just a few minutes when it comes to the setting up the risk management and those type of things. Hey, I've seen a few things in the chat about they can't find the cohold information. Folks, it's pinned to the chat. All right, if you're listening, it's pinned right there. It says cohold and it gives you, and I'm giving you the actual code in the chat. It's pinned right there. All you got to do is look at it. All right. There it is. Again, go to shared items, type it in, change the name to cohold and save it, and you're ready to roll. And then you got to go to the gear. All right. We'll do it real quick, real fast. I know people are asking about it. Let's do it real quick one more time. All right. Going to go up here, top right. All right. Open shared items. Stick that code right in there. This will light up green. Click it. Then when you hit before you hit import, change the name to cohold, hit import. And then once you do that, all right, it's going to be right up there on the headline, the little gear in your watch list. Just click the little gear in the watch list, hit customize, type the word cohold right there, and you'll see it. And then just add it over to that side, and you're ready to rock and roll. That's all you got to do. All right. So um, let's get rolling. All right. So what are we going to do today? All right. So Scott got us set up nicely when it comes to our looking at some bounces, some breaks, getting setups for some great signals to look at. And again, remember, just because we're showing these doesn't mean you should go out and make these trades right now. And we're talking about, Apple, and it's changing as we speak with regard to their earnings. So just be aware of that. We're showing you just what's going on with examples to look for. All right. So what I want to do is go over some things here about these entries that Scott talked about with this hold. And again, here's just a slight drawing of a flag pattern that came up right through here. All right. And when it comes up, can you see that this where it says enter? All right. There's a big candle, in this case, an open candle. So it's an up day for this period. All right. Now, would it say maybe a signal to get in? Okay. Then what if you missed it? You're going, oh man, I didn't see it when it happened. It pulled back a little bit, but then we got a new break. We got a gap up. All right. Now, Scott, gap ups. All right. Are those considered bearish or bullish moves?
A gap up.
Gap up.
You said the word up.
Up.
Yep.
Yep. Just like right here. All right. So very
Yep.
bullish. All right.
Bullish.
So if you miss this, so Scott, I'm sure, I don't know if you can see my screen or not, but
See
when you
it.
go to that one, all right, where that other entry sign is that a cohold? And it's compared to this low right here.
Yeah. What do you think, gang? What do you think? Yeah.
Yeah.
Yeah,
Right.
definitely. Yeah.
So there you go. So there's your next potential entry you could have made.
Right.
Okay. So just because you missed one here doesn't mean you can't just say, well, I'm done. I got to go find something else. It's over. All right. So no, keep watching it. There are other times you can enter. And in this case, if you want to use the call to enter off of, you can. It's like I said, it's an entry considerations. Okay. It's up to you as the individual investor to figure those kind of things out. Now then, when it comes to this, and we're going to get into orders in a minute. Okay. I want you to understand it's very important to use the correct terminology, because if you don't learn this, right, these are the things that you can't just think you got it right. You got to make sure you have it right. Okay. So, for example, in this one, consider conditional order setups. Now, we're going to do what's known as an OCO order here in a little bit, but I'm going to, after we get into some examples of some flag patterns that have popped up and other patterns that I want to talk to you about. But looks in this first one with a stop limit order. Now, this stop limit order can be used to get into a trade or to get out of a trade. You can use it. You can use a buy stop limit, and you can use a sell stop limit. Okay. But it still means the same thing. You risk missing the market altogether in a fast moving market. I'm reading it right off the chart. Right? It might be impossible to execute an order at a stop limit price or better. So you might not have the protection you sought. So what does that mean? What it means is this. Let's look at a stop limit to get out. So a sell stop limit. Okay. If you put a limit order that says, I want to get out at 150, okay, 150. What's that saying is the stock has to trade at 150 for that order to turn into an actionable order, okay, and for the market to take effect or to be ordered to take effect. It has to hit that price exactly. What if there's gaps around that price? Like we just talked about a gap. If it goes, let's say it's coming down and it stopped at 153, and then the next trade was 148. It did not trade at 150. So the order does not become an actionable order and you miss the market. You're not protected. You're still in the trade. Okay. So that's what it means by a limit order. You got to understand that and use that to the right way. Okay. Now then, a stop market or a stop order, not a limit, but it's a stop order. All right. It's not going to guarantee the execution at or near that active price. All right. You may say put a stop, get a stop at 150. But if it's moving really quickly, okay, and it moves around, could it actually activate, compete because it's competing with other orders at the same time? And if it's a lot of orders going on, could you mean you get out at 149.98? All right. Could be, but it's going to be at or better. All right. So that means it'd be ones to get out. It'd be you getting out at 150 and 3 pennies. Okay. Because remember, when it's stop order, it's that or better. It's that or better. All right. Remember that terminology. Okay. Now, so we're going to use some of these examples as we move forward here with some examples of on our site. Let me get to that. All right. And what I want to show you is a few things that we looked at, and I'm going to start combining a few things that we learned earlier in the week that Scott taught you and I taught you. So we start looking at some of these possible entries as we look at different examples. Okay. And remember, that's exactly what they are. They're examples. All right. It's not saying you should place these trades. As a matter of fact, the Apple trade that I was looking at doing at the end of the day here is already not going to happen for you come tomorrow based on what's going on with them with their news on earnings. Okay. You can see mine's already moved up already. You can see right now on Apple, it closed 171.35. After market, it's 175.39, 175.40. I think someone said earlier, because I got a delayed feed, it's at 180 something. So anyway, here we go. Let's look at this trade. Let's look at CAT. Everybody's heard of CAT before, yes? All right, now, here's a cool thing. Now, Scott and I did this yesterday. If you remember, we pulled up CAT and we said, hey, look, here is a flag pattern that formed on Caterpillar. Okay, here's a flag pattern that we drew. This is our drawing from last night, folks. And then if you remember, what I did is I right-clicked on that trend line. I duplicated it. Remember that? Okay. And then what I did was I drew that line right there. I moved it over and drew it, and I said, hey, here's the potential move it could take or it could make. All right. So flag, it broke up on earnings and look right where it went to. Wow. Coincidence. Isn't that something? All right. So, if you're still skeptical about things, that's all well and good. Okay. But Scott didn't know this was going to happen. I didn't know this was going to happen. All right. Earnings came out when it came out before market. So it came out at the beginning of the market, before the market even opened. All right. 5:30 a.m. And there it went. Okay. And that's where Caterpillar is right now. Now, here's a cool thing. If you remember, we put studies on our charts when it came on Tuesday. Remember the studies we made? We made a 10, 40, 200 MACD RSI volume. Remember that one? Well, I saved it up my bar up here. So let's do this. Here's the price pattern. Let's put our studies now on top of that. All right. And we can see kind of what's going on with this trade. Now, remember, we talked about potential entries for using our different studies that we like to use. And what I have here is I have the MACD. All right, is the MACD just turned up on the earnings? The answer is yes. Look at RSI. RSI stock was heading down off a little bit of that flag, coincided with this, and then we popped up. So RSI is trending up, and we have a big volume bar because today was earnings on that announcement. Okay, so before, when we had no information of what was going on, and if we just looked at from this time back, okay, let me get rid of today's chart. All right. And then we put, should stay. Let me see if it will. I hope it will. Yeah, it did. All right. A little hard to see, but look, MACD was trending down. Our RSI was trending down. Okay. All right. So we were saying, we might want to wait. All right. When earnings hit it, all right, and popped it and went one day up, then we broke through. Okay. So Again, put those studies in to help you see what was going on around you. Okay. Put them in and see what's going on around you. All right. Let me go to another one. Let's go back to our blank slide. All right. And let's look at this stock, TS. All right. So what do you see, folks? All right. I know Scott sees this nice flag forming up right here. All right. So you got a explosive move to the upside coming across. And what happened today? Folks, what is that right there? What is this right here? Is that a cohold? Is that a cohold? All right. Yes, it is. So could this be a potential entry point for this stock? You got a flag coming in, you got a cohold. All right. Oh, but wait, Scott Durfee, it's at an all-time high or a one-year high. So we should let it go, right? You're on mute.
My wife had been looking for that mute button forever. Yeah, that's a question that you often get, well, oh my gosh, it's at the high, it's at the ceiling. Well, even Deb's floor is my ceiling, right?
There
And
you go.
even with the right momentum, even with the right type of setup, etc. Now, I'm not saying it will or it won't, but it's had several highs in the past. And what if we set
Yeah.
it at those highs, right?
So our
That's
MACD
true.
starting to
That's true
trail.
with most companies, right?
Yeah, MACD starting to trail back up. RSI is
Yep.
trailing up. Got a little bump in volume. So there you go, folks. Doesn't mean that it's maybe something you can watch. All right, how about this one? All right, here's one called R. Now we did this yesterday. This is Rider Systems, and now you got a what is this a flag, folks? What do you guys think? Let me go back to the blank. All right, is that a flag? Yeah.
That's a flag.
And then what happened today on the flag? What is that right there? Is that a hold? Close above the high of the low day. Is this the low day? Here's the high. It closed up here. All right, you got a hold. All right. Could this also be a potential setup for an entry if it fits your trading style? Could be. However, Scott Durfee, that's at 1 year high again.
Yeah.
But,
Okay.
but then again, this was a 1 year high back
The
here when
high.
it was a high.
Yeah. That was the high.
Yeah.
Yeah. Yeah.
And,
And if we freak out at 227, then we probably are going to
yep.
freak out at
And then
250.
this was a high back here too,
True.
one point.
200. Yeah.
So
Yeah.
there you
I
go.
get it though, Ray. I get it. People, let's just go psychology of trading here for a second. I totally understand. There's
Yeah.
some fear that I don't want to be the first one to jump in the pool, those types of things. And so I get that. Some of that's healthy. Some of it can be crippling, though. So it's good. Yeah, what I like about what you're doing right now is you're kind of giving us some education that uh, nothing totally removes the emotion around trading, but if we can help mitigate that a little bit
Yeah.
or control it a little bit, it
Yeah.
helps our confidence levels.
So I got a comment here from Jeff
Yeah.
Jarosky CPA in the chats. Jeff says, "Hey, I thought a hold you have to have a downtrending chart." All right. So Jeff, let's dissect that a bit. If you're going to get onto into a trade, and we talked about this thing on day one when it came to getting on the right bus. If you're gonna be bullish in a trade, do you want to be in an uptrend or do you want to be in a downtrend overall? You want to be in a what? Uptrend. What is this blue line? That's our 10-day moving average, uptrend. Our pinkish little line is uptrending. Our 200-day moving average is uptrending. Now, is this a short term, a 3-day downtrend in this flag? The answer is, in this case, it is. But overall, is the stock in an uptrend? Yes, it is. Okay. And then we have that to hold on today.
Hey,
Okay.
Ray.
Good question.
Ray, just real quick, both can be right. So if we go back to what we talked about yesterday, remember when you were talking about continuation patterns and reversal
Hmm.
patterns? A
Hmm.
hold can happen on a continuation pattern, and a hold can happen on a reversal pattern. It's
Yeah.
not, it's kind of agnostic to the direction, but it has more to do, obviously, with levels of support and resistance. So keep that in mind. Great explanation, Ray.
Yep. So here's one, Scott. Starbucks. People have
Yep.
heard of Starbucks before. So you got again, you got an earnings announcement. Apparently, the market enjoyed that earnings announcement. You got a gap up, big momentum candle, a little test right here. Could this be something you put on your watch list as a potential setup for maybe a flag forming? You know, maybe could be you could get a ascending triangle coming in eventually. But there's something to watch right there. Okay, so if that's something that fits your time frame, maybe that could help. All right. So there's Starbucks, same kind of thing forming in there. How about this one? All right. Again, earnings season, folks. Can earnings season be the time that changed some of your that changed some of the actions of price action? All right, and put things more in a positive light as opposed to a negative light. Could be. Okay, could be. All right. Let's look at the. Oh, hey, Scott. We looked at this yesterday. Remember we talked about this one. We said, hey, let's see what happens on this one, the CSCO. There's the flag we identified in class yesterday. Okay. And then yesterday was a cohold. Yesterday was a cohold. We didn't take advantage of it yesterday because we were in class. All right. So today we have another one here, and it moved up pretty nicely. Moved up from opened at oh, wait, I just put it exactly what I can tell you exact numbers. It opened at 89.82, closed at 91.50. Okay, a high of 91.67 and a low of 89.32. Is so, Scott, when you see something like this, did we lose our opportunity or is the opportunity still there?
Well, I don't know yet. I mean, an opportunity could definitely still be there, but there's not a definitive loss of an opportunity here. I
Right.
mean, it's definitely broke a level of resistance. It's at a new level of resistance because there's nothing higher for it to go against. So, a trader or investor would definitely watch this for potential opportunity because, right, sometimes, frequently, what you'll see is these flags as a company begins to ascend in price. It will typically do that by way of bull flags, ups and a
Yeah.
pullback, up and a
Yeah.
pullback, up and a pullback.
So
I don't
another
know, but
yeah, another thing to watch at the same time, what Scott was saying is now sometimes it is a missed opportunity if it moved too far away
yeah.
from the previous close. This, not so much. All right. But if it moves more than a certain percentage, 10% away from where you're currently closed, then you may want to wait to see a pullback or get a confirmation. Okay. Um, so, Scott, I'm getting a lot of questions about this. All right. Where is that blank coming from? How did you do that? All right. So
Oh,
if we put our studies back in, all right. So let's look at this again, folks. Which way is our short-term moving average going? Up. Intermediate up. Long-term up. MACD turning back up. RSI turning back up. Okay. Are those more bullish in nature or bearish in nature? I'll let you guess on that one. All right. And so in this case, I'm able to go here and then I can go right back to this blank and it all goes away and you can get a nice contrast. And so, Scott, they're asking me, should I show them how I did this?
you bet.
All right. Here you
These
go,
must be a
folks.
good
Watch
group. I think
closely.
they deserve it.
All right. Watch closely, folks. Are you watching? Everybody watching? Stop typing. Stop typing. Don't do anything. If I see any more clicks come across the chat box, I'm not going to show you.
Oh,
All right.
you're so
There you
hard.
go. So everybody watch. This is how I create that blank in my toolbar. All right. First off, you got to know how to create a toolbar. All right. To be able to create a toolbar, you got to go to the gear. You got to be in the general tab on each chart under my tools. Okay. And then you hit apply and okay. Now it won't show up immediately, but when you put your cursor under the chart blue bar, hover it, it'll pop down and just click on that little pin right there to keep it there. Now, to create this, what I did, all right, if I go to that study and I open up the Erlenmeyer flask, okay, and I delete every single one of these studies that's in here, okay, and then if I go in here and I go, okay, delete, delete, all right, whoops, delete, gotta delete them all, okay, Come on, delete. And then I'm gonna say, okay, I'm gonna save the study set. All right. So when I do that, you save the study set, and what it'll do, you name it blank. All right, because there's nothing in it because you deleted everything as out of one of them that you already had saved. And then when you go to your toolbar, you just open up the gear, and then you go to your add a button, or you go to where it was in your tools, okay? And then you can add the blank. So if I'm going to add something, I'm going to add a study set, okay? That's in here. All right. Then you can go to add a button, you go to study set, and then you find the one you called blank, highlight it, okay? And then that way it goes back in there. All right. If I'm going to cancel because I already have it done. All right. Then make sure then after you do that, you got to get back into, click the done button over there. So you're back into your toolbar. All right, here we go. Very good. That took a few minutes, so we're good to go still. Hope that enjoy that. It's a little thing that we do in class. Scott and I do this.
Yeah. Hey, Ray, great job on that. And just like with the cohold gang, remember, we're about an hour into the session here tonight. So when you go back to review how to do that, that'll be a bit of a timestamp-ish. So maybe just write that down because
Yeah.
what Ray just showed you was huge. And you can revisit this section tomorrow when the recording posts to kind of review what
Yep.
Ray just went
Yep.
through there.
Yeah, we are an hour in. All
Yeah,
right, here
about
we
an
go.
hour.
One last one, and then we're going to move to the next slide. Okay, here's BAC. All right, and so folks, what do you see? I didn't draw it in here. I didn't draw it in yet. Okay, but is this right here? Oh, price level, trend line. All right, if I draw that to there, is that a flagpole? And then do I have? What do we have right here? Do we have a flag pattern? All right, got a flag pattern. Yes. All right, what happened today? What do we have right here? Is this a cohold? All right, here's a cool thing, Scott. Most people think that a low day has to be a red candle, right? Well, here's a low and here's a low. They happen to be the exact low. Look at this. The low on that candle right there is 51.83. The low on that candle is 51.83. So the low in the pattern happens to be up days. All right. Is that okay?
That's
Yes. All right.
perfectly fine.
Yep.
Absolutely. Yeah.
So this one, if we were back about 3 days ago, that was the hold on this. And that could have been a potential entry.
Yep.
We didn't do it. We were in class. We didn't do it. Then you had this down day. So we're like, oh, got to wait. Then you had an up day again. But then did this candle right here, did this close above the high of the low day? This is the low day back then. The high on this candle right here yesterday, all right, the close was 52.88. All right, the high of the low day is 52.93. This is not a cohold. This is not a cohold. All right, because it did not close higher than the low day. This is a cohold. It closed higher than the low day. So this could be a potential entry. So let's hold that thought and think about this as we get into the next slide here.
Hey,
All right.
real quick, before you move away from that, will you just zoom in on your flag portion? Because look at that green candle. That's our low day. That green candle is at a level of no, the third second one to the left from there.
This one?
Yep, yep, yep. So you see how that also the low day, but you see how that is also a bullish engulfing at a level of
Yes.
support. At a level of support.
Good catch, my friend. Good catch. All right. Now, before we move on to some examples of doing some conditional orders, let's talk about conditional orders. Okay. So in this case, this is in your book, all right, or your reference guide, I should say. All right. And this is a way, it is not the way, it is a way to look at what you have in your current portfolio, okay, and look at where you are with the amount of funds that are available to trade, and so that you don't overtrade, so to speak, or or put too much into one of your account into a trade. All right, because um, can things go wrong? For example, let's go over here real quick. Let's do this. Let's look at this one. All right, MSFT. Y'all heard of Microsoft? Yeah. All right. What happened here? Look at this. Let me get rid of this line right here. All right. So here is a what? Is this a nice flag? Yeah. And what happened? Uh-oh. All right. Can news affect things? Yeah. So, failed move. All right. Nice flag, beautiful flag. All right. Bam, came down. However, look at this. What is the trend overall of Microsoft coming into that flag? All right. Didn't have a lot of oomph to it. Not saying that's the reason that the earnings failed, but you know, be careful when you're going into stocks that are making a long, long, long run of a downtrend. Then you had just one level of a higher high, and now you're getting a higher low. Now, could that mean as they move along, if other news comes up, this could turn around? I have no idea. Matter of fact, I could consult the ball, but I don't think it's going to help. Okay, there we go. A little levity into the class. We got to have some. All right, and then here's another one that you might have heard of, META. All right. Now we did this yesterday, folks. We actually drew this in class as a class. If it would have popped out of this pennant, all right, we used the base of our pennant as a potential move to the upside. What happened today? Failed move. Failed move, right? So you could have all the most wonderful setups in the world. Everything could be in sync. You had your good morning coffee. Everything was wonderful, right? And things can go the other way. And that is why Scott Durfee, myself, Ben Watson, all the folks that come to class, all of the coaches in webcast that talk to you and they talk about money management, all right, about the trade management and your position sizing. It is key because things can go the wrong way. You can have all the wonderful things set up, and just like that, news happens, and then you have some losing trades. You don't want the losing trades to take you out so that you can't trade again. Or you get so nervous or you get so shook up, you're like, I can't do this anymore. Okay? So protect yourself. I know Scott says this. I know I say it all the time in class, and that's this. Before, before you get into any trade, have an exit strategy. You need to know when you're going to get out of those trades before you even get in and hit that button to send that trade off. Okay? Have an exit strategy. Protect yourself. One of the worst things you can do is go, and I know some of you said this. I said it. All right? And that's this. It can't go any lower. All right? How many of you have said to yourself, you got into a trade, it can't go any lower? Not going to happen. All right? So please do yourself some justice and do what you have to do to have your strategy set up, have that exit strategy before you get into the trade. Now, here's an example of a way. This is a way to set yourself up. Let's say you have a portfolio of $50,000. Okay. And this is how we're going to determine what your trade risk can be and potentially how many shares should I buy of a trade. I got a guilty in there if you've said that before. I know I've said it. It can't go any lower. I know I've said it. All right. All right. So let's say you got $50,000 and you want a percent of risk that you determine 1%, 2%. It's up to you. This is a you thing. Scott can't tell you. I can't tell you. This is a you thing you got to figure. But we're going to just set it for example purposes right now at 1%. So that means you have a portfolio risk of $500. You're saying I'm willing to let that roll. All right. This is what you're willing to risk on your trade. So if you know that number, you're saying, okay, then what number then? How many shares can I buy if that is what I'm willing to risk? All right. Well, how you figure that out is this. Okay. You look at your entry price, stock's trading at 100, and you set a stop level, you know, at 10 at 90. So that gives you a trade risk, right, of $10. $10. That's your trade risk. So then if your portfolio risk is 500 and you divide it by 10, it gives you the number of shares you can buy. That makes sense? Okay. This is in your reference guide. So you have this to go off of. All right. So you can use this as a formula, if you will, to start setting things up. So let's do this. Let's use that formula and let's look at some charts. Let's go back and let's look at let's look at that which one we did. Yeah, it was Cisco, right? So let's look at that one. Let's look at that trade and let's use that formula and put a OCO order in place to see how that works. All right, CSCO. All right, follow along. All right, now then, a couple things we got to figure out now of how we're going to do this. Let's say, again, we're using that same figure. We got $50,000. We're willing to risk 1%. So we got a $500 a portfolio risk identified. So 500 portfolio risk identified. How do we do this? How do we set things up to make this work? Okay. So in this case, I already drew in some lines here. Okay. I'm going to do one other thing that maybe you like this as well. We talked about this yesterday with Fibonacci's. I'm going to put a Fibonacci on top of this. Okay. And see if this can help us out with a little bit of understanding what it is that will work out for us. All right. So if I put a Fibonacci, all right, right around that area right there, and I pull it down to the bottom, okay, and I go about that range right there. All right. Can you see how this can give me some targets also, or I can use my, I can duplicate my drawing, okay, and I can move this to the same thing and use that as my potential draw. I can go to the bottom. We can go to the bottom, the top, doesn't matter. Go to the bottom, go to the bottom. All right, some of that range right there. All right, and that can give you the same type activity of how you want to figure your targets out and those kind of things. Okay, so now we have some areas defined on our chart. Now, let's say we want to place this trade, want to get into this trade. We see the trade is trading at what? It closed right now at 91.50. I'm looking at right here at 91.50 is where it closed. Okay. And so if I want to get into this trade, and let's say you want to do an OCO order, all we have to do is go right up here to where this is at and go, okay, right click. I'm going to buy custom OCO bracket. Now we're fixing to get into the meat here of how you use some of the information. Oh, before we do that, let's do this real quick. Let's look and see if this is even wise if we put our technicals back in there. All right, so we got our MACD rolling up, RSI rolling up, some volume kicking in. Okay, you're feeling kind of bullish. All right, let's go back. All right, so let's open up our trade tab. All right, so now if you want to get into this, well, we like to be in the bus going north. Do you want to go in of where the stock, closed at 91.50, or do you want to say, we want to go in maybe a little bit higher that says, okay, I want to see this bump up a little bit before I get in. If that's the case, what we do here is we do a stop, all right, a buy stop, and we're going to say, you know what, I want this to go up to 91.65. Okay, I'm willing to get in at 91.65. And the reason I'm doing this is if it goes up to 91.65, it's going to then trigger that order to be a market order, compete, and get me in at as best I can. All right, or close to that as I can. All right. Otherwise, if you just leave it as a limit, it could open up right now, go down, and you could get in because it's going to fill you at that price or better. So if you give it a point to get to before it enters, that's what we're doing. Okay. Now then, let's do a target to the upside. All right, we had a target to the upside. It was around 97-ish range, somewhere in there. You can remember this is just an upside target. So, you can make this as high as you want to make it go, whatever you want. So let's go in here and let's make it 97.59. 97.59. Okay, 97.59. That's where we're thinking is going to go up to. And then now we got to set our price to the downside. Okay, a price to the downside. All right. In other words, we've got to develop what is our trade risk going to be? Trade risk. So there's a couple of things you can do. You can use Fibonacci's. All right. And if you use the Fibonacci, you could go in here and you can say, well, Here's the low. Here's the cohold from yesterday. Here's the low in the chart. You can go a percent below that, or if you want to use a Fibonacci line, whatever you might want to use. Okay. So it depends on what you want to do as an individual trader, how you want to get there. All right. I'm going to look at this 8612 range right here, this Fibonacci line, and I'm going to use that as my exit point to create my trade risk. All right, to create my trade risk. So my low, if it goes against me, I'm going to say 8612. And I use that, folks, that number that I came up with on that number right there was strictly off the Fibonacci. All right, you can use what you want to do. And again, this is just an example. Okay. Now, here's the thing. How many shares can I buy? Now you see over here, we got 100. Well, we can't use 100 because what do we need? We want to go in and look, okay, our trade risk, all right, our trade risk on this, all right, is $5.53. All right, 553. So if I want to go into this, I'm saying, okay, if I'm trading it, if I'm willing to be my stop from my entry point of 91.56 to my exit of 86.12, that's 953 of risk. Okay, 953 of risk. So what do we do? How do we again calculate how that works with regard to a trade? All right, so if I go up here, right, portfolio entry price, stop level, that's the 553. Okay, now I'm going to say, okay, so if I have a $500 as my portfolio risk, remember 50,000, 1%, and divide it by $5.53, I come up with 90 shares. I come up with 90 shares. Okay. So if that's the case, 90 shares of this stock right here times 90 shares times the entry price of 91.65, that comes to $8,248 on a $50,000 account. That's too much money. All right. That's too much. So if that happens, what you do is you get your 50,000, you do 10% of that, which is $5,000, multiply that by your entry, and now you come up with 54 shares. Okay? 54 shares. So if that's the case, what I want to do now is change this to 54 shares. Make sure you change all of them to 54 shares. Okay? Because you don't want to have the different numbers here. If you're only buying 54, you don't want to sell 100. Okay. Now, if this is the case, if we hit confirm, oh, wait, one more thing. We'll do this for today, which means we're going to use it for open for tomorrow. But if we get filled, we want our cells to be good till cancel. Okay. Now, let's go and review what we did. Confirm and send. So what this says is this. I'm willing to buy 54 shares of Cisco at a stop order, buy stop 91.65 to open. If I should get filled, then I want to sell it if it goes up to 97.59, which is triggered by being filled to number one. Okay. If it doesn't go up and it goes down against me, cancel that order and fill this order and says, get me out at 86.12, triggered by if I got filled here. So you won't have both of them open. You're not going to have an open order if one gets triggered. That's why it's called one cancels the other. Okay. And you can see that's within our range of 10% of our $50,000 is 4,941 total. Okay. That's going to cost you, all right, to get in that trade. That's the cost of the order itself. All right. So if you like that and you're ready to roll, you just hit send and away it goes. And then go ahead.
Just real quick, there's a question in the chat that says, if you're buying that many shares, then why is your risk only $500? How do you figure that?
All right, because the risk is between when you bought it at 91.65 and you're going to sell it at what? 86.12.
Worst case scenario.
Worst case scenario. All right. If you get filled at that. Again, you can get close to it. It might not be exact. It'll be close when it comes to limit orders. All right. So there you go. And now you have your orders in there. So if it does go against you, you don't lose your shirt. If it goes up now, here's the thing, folks. If it goes up, all you have to do is grab this with your cursor, click on it, and you can raise that up. And you don't have to keep it there and it'll replace it. Okay. And hit send. And now you just moved your order up a bit. Okay. So you don't have to always say, okay, I have to get out now. You don't have to do that. Okay. All right. Let's go a little bit quicker. Let's do one more. Let's do that BAC order. All right. So BAC, same kind of thing. All right. Here's our flagpole. If I go in here and I right click, all right, and I'm going to duplicate our flagpole. I'm going to move it up here. All right. Right to that spot right there. Okay. Or I could use maybe Fibonacci's. Okay. If I draw it in, all right. Does it come close to the same type thing? Whoops. Sorry about that. Sure does. Okay. We have our MACD rolling up, our RSI is rolling up. So maybe you're bullish on BAC. Okay. If that's the case, can you do the same type thing? All right. So on BAC, we'll do the same $50,000. All right. And then we look at our different prices to make the trade. How do we do it again? We go here, we click on the chart. Doesn't matter where you click on it, okay, because you can change the price. You right click, buy custom, OCO bracket. All right, we go a little bit faster on this one. All right, so in this case, entry price, all right, so it closed at 53.46. So let's say we want to go, okay, you want to make sure we're on the northbound bus. So let's say we go to 53.55. All right, 53.55. And we're going to do this. We're going to do this a buy stop. All right, 53.55. So it's got to get up to that range before it creates a market order. Okay. Then if it moves up far enough, here we are about the 59.36 range from the Fibonacci and from our flagpole range. So let's do, I don't know, we can do whatever. It's a target to the upside. Doesn't mean it's going to go there. It's just a target is all it is. Let's call it 58.50. All right, we'll call it 58.50. All right, so if it goes up to 58.50, we'll get out of it. All right, that's our target to the upside. Then if it goes down against us, okay, if it goes down against us, can we use the low, those two low points, all right, and the percentage below that? Remember, the low on that day was 51.83. I'm looking right up here, okay, 51.83. Or we can use the percent below that, or we could use the Fibonacci. We could use a Fibonacci line. Maybe we want to do 51. Let's go down here to that line, 51.25 range, somewhere in there. Let's use 51.25 to get out. Okay. All right. So we're defining our risk. We're defining our risk. All right, which is the key thing. 51.25. Now then, same type thing occurs. You got to figure out what is your trade risk. So 53.55 minus 51.25 is $2.30. Okay, 230. So if you go in there and you go, okay, I got a $500 trade risk. I'm going to divide by 230. I can get 217 shares. However, 217 times 53.55 is $11,620. It's a little bit too much for a $50,000 account. So let's go do our math. 5,000 divided by the trade price of 53.55 says you can buy 93 shares. So what are we going to do? All right, we're going to go. Sorry, I went the wrong way. We're going to do 93. Again, change all of them. 93. And we're going to do 93. Okay. There we go. 93. Confirm and send. Let's look at it. Here we go. We got what? Buy. All right. BAC. 55 to open. Okay. Sell. Oh, hang on. We didn't do our good till cancel. Okay. Good till cancel. All right. Confirm and send. All right. So OCO order. Buy 53 at 53.55 to open. Then we're going to sell. If it goes up to 58.50, or if it goes against us, 51.25. It's going to cost us $4,971.78. Is that within our 5,000 range? It is. We're good to go. Confirm and send. We're off. Now, let's look at some of these. Let's go back real quick, Scott. We had Apple up there earlier, yes? Now, if we were going to buy Apple, all right, And let's say we had a little larger account and you wanted to get into Apple. Now this is obviously going to change because we're already up to 282 already. This is just an example to show you what's going on, and it may throw us off a little bit with our options here. And remember, I'm going to show you a quick option thing to get you ready for June's class. All right, for June's class. Now, options are not suited for all investors. They have unique risk with them. So understand before you do anything. But I'm not going to be able to teach you in a few minutes how to trade options in a few minutes when it's a 4-day class initially. Okay. So let's say if you wanted to buy this, we right click on this. We want to just buy the stock. Okay. And we're going to do 100 shares. All right. If you bought an Apple 100 shares, it's going to cost us $27,144. Remember that number, 27,144. Let me write that down real quick myself. 27,144. $27,144. Okay. Now, what if you're saying that's too much of a haircut? Don't want to do that. But I like to get into Apple, but I don't want the risk with all that coming out of my account. Is there a way to do that? Well, there is. If we go to the trade tab, and we open up the options chain, and don't worry about all this information right now. We're going to get into that in the options course. All right. But this just tells you this is the 28 June options. It means it'll expire on 28 June. All right. And these are all strike prices where you control the stock at. If I go down here to where the stock was currently trading at 271, and it's already changed a bit because of what's going on after market because the stock moved up. All right. And if I want to go in and say, well, instead of buying this stock, I want to control this stock. And instead of buying the stock at now almost $280, let's say I want to get in and control it at around $280, and I want to do this 280 strike, okay? 280 strike. And I want to buy the call, all right? And this gives me the right to buy the stock. I don't have to buy the stock. But if I click on this and it would confirm and send, all right, now it's only going to cost me max loss. It's going to cost me $770. And what's our max profit? Infinite potential. Okay. So in this case, I don't know about you, but 27,144 or 770. If you want to see how that works, I highly encourage you to come to class coming up in the beginning of June. What say you, Scott Durfee?
Absolutely, Ray. Great opportunity. Hey, what you just talked about there, I think sometimes opens a lot of big aha moments. So as we saw a lot of aha moments talked about in the survey yesterday. So
Yeah.
I'll bet you that's another one that we see. Great job.
You got it, man. Thank you. You got good dude too. Hey, goals, recaps, entries, exit. I hope by showing you all the things we put it together. Scott did a great job of all of our candles. All right, we put our patterns together. We put the studies together. We looked at trend. We looked at support resistance. All those things we talked about all week long. We put them in action today and put them in there on some example trades. And that's exactly what they were, example trades, because tomorrow things are going to change dramatically, right? So, but I hope you can get an idea now of how to put those things together when you're at home and you go, okay, now I can see why it's so important to know what trend is, where support resistance are, how the price patterns work as a comparison where support and resistance is, and where's that price pattern, where's that candle, where the price pattern telling me, how can I use that for a target, how can I set myself up for setting my trade risk, or where my exit is going to be. All right, all those things come together to hopefully give you a more informed way to make a decision instead of just guessing. Okay, so risk management, folks. Again, use that tool. If you don't use the one we showed you, use something, but protect yourself if something should not go the right direction. All right. And there's many ways of conditional orders to put out there. We just showed you one basic one, an OCO order. Okay. So take advantage of that. Now, we hope you enjoyed it. Quick survey. Please take a minute or two. It's only a few questions. Let us know what you feel. How is that going to help you? All right. Again, these are recorded for you. Make sure, Brett, awesome job to Brett. A lot of folks asking questions, and Brett was putting them in there. All right. You have the tiny URL code here. I'm going to also put in the into the chats the survey itself as well. I'm gonna pin it in there so you can see it for a few minutes. So
I did
you have
that, Ray.
it.
It's pinned already.
Oh, is it pinned already?
Yeah,
Okay,
it
cool.
is. Yep.
Okay, good deal. All right. But take a minute and do that for us. We greatly appreciate it. All right. And then the other thing that is available to you folks is remember the class we did. Here's the agenda. We want to thank you very, very much to spend 4 days of your important evening with us and afternoon and understand that we're here for you. If it wasn't for you all, we wouldn't be doing this. Scott Durfee, what say you? End us out of here.
Another great night. Had somebody request that we close with the cowboy hats. That's obviously somebody that's been here in years past. Those cowboy hats are actually behind this green screen right here. Great job tonight, Ray. Great job, everybody else, for being here tonight. We look forward to being with you again in June. In the meantime, at our live in-person events, don't forget to hang out with us in June. Make sure you get signed up for that. Also, as Ray mentioned, please fill out that survey. Back to you, Ray.
All right, guys. Have a great week. Have a great weekend. And tomorrow, remember tomorrow. What is tomorrow? We got a wonderful National Investors Day. There it is. Make sure you go in there, get registered, and have a great day tomorrow.
Big day. Thanks, everybody. We'll see you next time.